outlook and policy thrust for 2019. Global growth projections both for 2018 and 19 have been revised downwards to 3.7% from 3.9% earlier projected. Growth momentum in the US is projected to remain strong as fiscal stimulus continues into 2019. In emerging markets, growth factors are revised downwards for Argentina, Brazil, Iran, Turkey, and South Africa, reflecting country-specific factors, uncertainties in the financial conditions, and rising geopolitical tensions as well as higher oil import bills. In light of the current developments in both the global and domestic economies, and based on extensive simulations, the CBN is of the view that the short-term outlook of the Nigerian economy remains good. We expect that in monetary policy stance will remain judicious, research-driven, adequate and supportive of the real economy, subject to underlying fundamentals. You can draw your conclusions from there. The current tight stance is expected to continue in the near term, especially in view of rising inflation expectations and exchange market pressures. Though we would act as appropriately adjust the policy rate in line with unfolding conditions and outlooks, the CBN will continue to ensure that the policy interest rate is delicately set to balance the objectives of price and monetary stability with output stabilization. On GDP, with favorable oil price developments and continued efforts at driving indigenous production in high-impact real sector activities, especially agriculture and manufacturing, the GDP is expected to pick up in the remaining 2 quarters of 2018. This will be buoyed by the anticipated budgetary and electioneering spending in the near term. From 1.5% during the second quarter of 2018, growth is projected to quicken to 1.7% during the third quarter and 1.9% during the fourth quarter of 2018. On inflation, inflation expectations are rising on the backdrop of anticipated politically related liquidity injections. For the rest of 2018 and towards mid of 2019, Nigeria's inflation rate is projected to rise slightly to about 11.4% and then moderate thereafter. On exchange rate, though the CBN has so far managed to maintain stable exchange rate, the current capital flow reversals from emerging markets is expected to continue to exert considerable pressure on market rates. This pressure could be amplified by the forthcoming elections, especially as the political market space heats up. Notwithstanding these pressures, the CBN is determined to maintain its stable exchange rate stance over the next few months, given the relatively high level of reserves. Gross stability is expected in the FX market, given increased oil-related inflows and continued import bill. I'd like to make it categorically clear that sustaining a stable exchange rate is of overriding importance to us at the CBN, even as we continue to put measures in place to shore up our reserves. On the balance of payments, our overall balance of payments is expected to remain positive in the short term. Hoping that oil prices continue to recover, we expect the current account balance to strengthen even further. This will be supported by improved non-oil performance as diversification efforts begin to yield fruits to reduce undue imports. On supporting domestic production, given the remarkable success that has been achieved in stimulating domestic production of goods such as rice, cassava, maize, and etc., as a result of the restriction placed on the CBN by the CBN on access to forex for these items, the CBN intends to vigorously ensure that this policy remains in place and additional efforts will be made to block any attempts by unscrupulous parties. Here, I mean both individuals and corporates that intend to find other avenues of accessing forex in order to import these items into Nigeria. And please, let's listen to this. The CBN's Economic Intelligence and Banking Supervisions Department will collaborate, will work very, very closely with the Economic and Financial Crimes Commission to expose and sanction any bank, any company and or its directors or FX operator that colludes with unscrupulous individuals, companies to undermine the policy on 41 items. The prohibition and sanction shall be extended to smugglers of banned items. Such sanctions will include, but not limited to, prohibiting that bank from maintaining prohibiting all the banks in Nigeria. All the banks in Nigeria from maintaining any bank account for any such institution or persons in Nigeria. If you are caught either as an individual, as a person, as a company, that an investigation reveals that you undermine the policy of government and the central bank in ensuring that we deepen local production of goods in Nigeria, we're saying that that bank, that company, and the individuals and directors and shareholders of that company, that the central bank will prohibit all the Nigerian banks at the same time from maintaining any bank accounts for you in Nigeria. You may draw your conclusions from what this means. Given the global and domestic headwinds we face as a nation, and the volatility that is being experienced in the crude oil market, we have no other nation as leaders interested in the progress of our nation but to work very hard to spur job creation by reviving agricultural and industrial activities in this country. If we continue to support the growth of smallholder farmers, as well as help to revive palm oil refineries, rice mills, cassava and tomato processing factories, you can only imagine the amount of wealth and jobs that will be created in the country. This could include new set of smallholder farmers that will be engaged in productive activities, new logistic companies that will transport raw materials to factories and finished goods to the markets, new storage centers that will be built to store locally produced goods, additional growth for our banks and financial institutions, as they will be able to provide financial services to support these businesses. And finally, the millions of Nigerians that will be employed in factories to support processing of goods. If we turn a blind eye to the opportunities that are being created as a result of our policy on 41 items, we'll be spelling doom for our nation. We can no longer afford to depend solely on imports given the size of our population and the need to create jobs for our people. This is precisely the purpose behind our intention to restrict and will continue to restrict access to forex on 41 items. And I urge all stakeholders to come on board as we intend to be vigorous in our pursuit of this objective. On domestic credit, the bank will explore the possibility of leveraging technology to enhance credit to critical sectors of our economy, especially agriculture and manufacturing. Our recently announced policy to refund portions of CRR to banks that are financing new projects or expanding existing ones in agriculture and the manufacturing sectors will be intensified and enriched in the coming years. This, we believe, will bolster job creation while supporting our agenda to correct Nigeria's imbalances and vulnerabilities. As for our foreign investor friends, as the monetary and fiscal authorities continue to work tirelessly to support the recovery of our economy, it is important to acknowledge some of Nigeria's enduring strengths, which offer significant rewards for current and prospective foreign investors. Notwithstanding the impact of the recession, Nigeria's economy remains the largest in Africa by the size of its GDP, with a very well-diversified mix of opportunities across different sectors of our country, such as ICT, manufacturing, solid minerals, trade and agriculture. The CBN, and indeed the federal government, is open to foreign investors who are keen to support our efforts at unlocking the immense opportunities and growth potentials in our economy, knowing that it offers mutual gains to both the investors and our country. Investors can be assured that their investments in Nigeria will be duly protected by the authorities, as we are fully aware of the various advantages they can provide to our economy in terms of capital and technological know-how. We hereby reaffirm our commitment to investors that Nigeria is indeed open for business.